Welcome to Overtime. I'm Scott Wapner. You just heard the bells. We're just getting started from Post 9 here at the New York Stock Exchange. Boy, do we have a busy hour ahead. We have AMD and Snap earnings. Those in the next few moments, as well as the march up to that Fed decision now less than 24 hours away. Our reporters waiting for the results to cross. We'll show you the stock moves as they happen. AMD, as you know, yet another check on the chips, which are a real battleground right now, off to a really good start. And then there's Snap, perhaps giving an early read on Meta, at least when it comes to the slowing ad market. And Snap, perhaps, well, we'll see what it does, because the stock is up a lot in a short period of time. And that brings us to our talk of the tape today. These critical 48 hours ahead, the big tech earnings, tomorrow's Fed decision, news conference from Chair Jerome Powell. All of it is front and center. For what's at stake, we bring in Joe Terranova. He, of course, the chief market strategist of Virtus Investment Partners. Welcome. Nice pop into the close. So what's riding on the next 48 hours, Mr. Terranova?
So the month of January, clearly the revenge of high beta. That's how we could define it. If the Federal Reserve wants to respond to the easiest fiscal conditions that have existed for the market since February of last year, they are going to have to go beyond the attempt that they've had in the last month, which is try to utilize the communication tool to signal to markets that, oh, you're getting a little bit ahead of yourself. I think they have to go way beyond that, and I'm suspicious that they're going to do it. I don't think they're going to do it. I think they're going to fail in that endeavor. They're going to lose credibility by not being able to do that if they don't rein in some of the excessive speculation that's going on right now.
What do you mean? So are you suggesting that Powell's going to be perhaps more hawkish tomorrow than people think because of the gains in some of the areas of the market that, you know, are synonymous with froth?
So I think he has to deliver. And again, this is if the Federal Reserve intention is to walk back some of the easing in financial conditions. He has to deliver the Jackson Hole speech, but he's going to have to stand there for the entirety of the press conference and maintain that demeanor. Allow for markets to understand that the Federal Reserve is going to reach that 5% target.
So you're expecting him to be hawkish? Jackson Hole was hawkish. It was 8 minutes of hawkish.
Scott, what I'm telling you is what he has to do to reverse the easing in financial conditions that currently exist. I said I'm suspicious that he's going to do it. I don't think he's going to be able to do it. I don't think the Federal Reserve is going to be able to temper the animal spirits that are present right now in the month of January.
So
I think they're going to fail.
So
I think they've lost credibility.
You think as January goes, then so goes for the near term for the market, because that's the January effect can be pretty powerful. We've had a good month. Do you think it has legs?
We've had a good month. I think it's a bear market rally.
You still
in high
do.
Beta.
You still think
in
it's
high beta, I think it's a bear market rally. In other areas of the market that are reflected, as we said yesterday on halftime, with a little bit of a lower beta exposure, more quality, more reliable earnings that are present. No, I think that in that instance, you could be invested, and I think you'll see that you'll be okay coming out on the other side of this monetary policy.
So I'm going to ask you again, all right? Does this rally have legs or not? That's what I want to know. And honestly, and that's what everybody wants to know. We're off to a pretty good start for the year. Sentiment was really negative, okay? Sentiment has come around a bit. The internals in the market tell a much better story than they had in the past.
Agreed.
Is it all a head fake or not? Simple.
The significant outperformance of the NASDAQ relative to the S&P, I am incredibly suspicious of, and no, I don't think that outperformance maintains itself. I think the S&P will be fine, a rocky road through the course of 2023. The S&P ultimately will be fine, and it will close the performance gap that currently exists between the NASDAQ and its index.